have a phone call message. Let's see what we got there.
Yeah, I had a question there. Joe was saying that the Roth is passed on to your kids tax-free. I was told by my tax accountant that, no, it is not passed on to your kids tax-free, only to your spouse. See if they can clear that up for me. That's a big question mark for me. All right, thanks. This is Rob, and I live in Ohio, okay? Thanks.
Rob from Ohio. Appreciate your call. Here's my advice to you. I would fire your tax accountant because he doesn't know what he's talking about.
Fair enough. It is so it is tax-free to your kids, and if your kids still have a balance when they pass to their kids, it's tax-free to them as well. Now, what the accountant could be thinking is estate tax, and none of these accounts are estate tax-free. In other words, if you have more than $11.4 million in assets, and you pass away, whether it's a Roth.
And Rob, if you're married, if you got $22 million,
yeah,
then the Roth might be taxed, but it's not income tax and it's state tax.
But that's what I think.
You're giving the accountant the benefit of the doubt. You're trying.
I'm standing up for my accountants.
You're standing up for your brethren.
But my guess is that's where the confusion.
No
came
way.
in.
I'm telling you right now, this accountant doesn't know what he's talking about.
Well, I know that.
Right.
But I'm just trying to figure out why he would have said that, because it's so clearly a false statement. The Roth, once the money goes into a Roth, it's tax free.
I think there's a lot of individuals that really don't know this stuff.
True.
Even accountants,
apparently.
Right? It's like, all right, well, I mean, a lot of accountants don't even know what Roth IRAs are. No offense, because they're doing the tax return, no planning. And so, if I'm doing a Roth contribution, Alan, and you're my CPA, right?
Sure.
You look at my tax return, I give you my stuff. Are you going to ask me, did you make a Roth IRA contribution?
Well, I need to, because if you make too much money, it's disallowed. So I'm supposed to.
Okay. But you look at my tax return. I'm not even filing a tax return this year because I make less than $12,000.
Yeah, right.
But let's assume I made $15,000.
Okay.
Right, because this podcast is taking off.
You got a 50% raise.
So, if I file my return and you already know, let's say I don't qualify for a Roth, and the accountant's not going to ask.
Yeah, well, if I know your income is well below the limits, that I don't need to know.
Right. And then are you going to ask me, hey, thanks a lot for all your information that you're giving me. By the way, can I get your Roth IRA statement?
No, of course not.
The only way you would do that if you're like also an insurance salesman / CPA.
True.
Right?
Yeah. Especially for a Roth, there's no reason to ever get it.
Right, because it's an after-tax contribution. It
Right.
grows 100% tax-free, and when you pass away, it's tax-free to the heirs.
Correct.
To anyone. So the CPA was probably just, or the tax accountant or whoever it is confused on tax law, period.
Right.
Because it's like, well, it could go to your spouse, but it goes to your kids? I guarantee this is what happened. No, I don't think that's right. And so the guy leaves, calls Joe and Big Al, and then the CPA looks it up and was like, "Oh shoot, damn it! I think,
Yeah.
I made a mistake."
He asked his buddy down the hall.
Hey Rob, this is Mr. Accountant again.
I might have given you the wrong.
Might have given you the wrong answer, or maybe he just was. Don't worry about it. Another story, dude. Sorry, I didn't mean to call you dude. But
Sorry, that's endearing, I think.
all right. So I was teaching a class at Southwestern College in San Diego, California. It's
Yeah.
in Chula Vista. Awesome. I always love teaching down there. Usually a lively group. They like to have a lot of fun.
Right.
And so we're going through, tax diversification. Here's what an IRA is. Here's what a non-qualified account is. Here's what a Roth is. Here's how these accounts are taxed. Here's how you can invest in them. Here's how they get money into them, and so on and so forth, right?
Right.
And so one gentleman was like, oh, wow, I have all my money in a retirement account. Maybe a Roth might make some sense for me, right? And then so it's a 2-part class. He comes back, and he's like, yeah, man, my accountant shot that one down. And I was like, okay, well, what do you mean? And he goes, yeah, the accountant said, it doesn't make any sense for me. I said, oh, okay, well, that's fine. I don't know anything about this gentleman.
Right.
Right?
You're just throwing out ideas.
Yeah, just say, well, if it doesn't work, it doesn't work. All right, well, then, you could try this, do this, do this. There's 1,000 other things that you could potentially do. So He ends up coming into the office, allegedly.
Right.
Right. And he goes, "Hey, you know, my I've been with my advisor for a long time and really like my advisor, and you know, she said she kind of put the kibosh, you know, on the whole Roth IRA deal." And I was like, "Oh, okay." So he shows me the email, right? And then he's like, "Hey, you know, I was talking to some people, and maybe it might make sense for me to contribute a little bit of my 401k to the Roth 401k, you know, just to get a little bit more tax diversification. What's your thoughts?" And so the question that he asked her was, maybe I put a couple percent of my 401k contributions into the Roth part.
Okay.
And then, so I wish I had the email here. She's like, "Well, I don't want to be, sassy here, but you tell your accountant friends to stay in their lane."
Really?
Yes. And then it went on to say all this false. It was like, first of all, you don't qualify to do a Roth. I'm like, "Oh, okay, 401ks, there is no income limitation."
Correct.
You can make $1 million a year. If you want to put money into a Roth 401k, by all means, put money into the Roth 401k.
Right. So that was first wrong.
First wrong, right? And then but your income is too high. His AGI was $68,000.
So
married.
It's below the contribution limit as well.
His taxable income was $40,000.
Right.
Because he just started a small business.
Got it.
Right? And all of this kind of carried over, so he had a lot more deductions.
So he's in the low 12% bracket.
He's in a 12% tax bracket.
Right.
And then it's like, okay, well, you stay in your lane.
You get in the right lane.
Or get in the right lane, or do some studying.
Right.
I hate bashing but I mean, come on. You know, I feel bad for Rob. The tax guy saying, "Yeah, no, the thing doesn't pass to the." And well, good for you, Al.
Right. I try to stick up for him.
You're glass half full, and
Yes.
I'm half empty. You're my yang to
To the yang.
to my yang.
Okay, I guess that's good.
All right.